Alright guys, so essentially these videos will be documenting my real estate journey, more like a personal journal. And so this past week while in Arizona at the Owners Club retreat, we spoke a lot about our Mount Everest. Specifically, my Mount Everest is giving affordable housing to 500 people through co-living. This will be made up of about 75 properties. We have 2 properties like this already where it's rent by the room specifically. We do have other properties that are regular rentals. However, the affordable housing is unique because you're taking a normal house and really maximizing the square footage. For example, you're turning a living room into another bedroom. So I have my big goal, which is the 75 properties. At least 70 of those are co-living. My shorter goal, I call it the Pareto 20 plan. It's made up of first 20 properties through co-living. And I just want to talk a little bit about how I plan to actually do that. There's a lot of things I've learned from being in Subto, getting a Florida real estate license, studying business credit. And so I want to explain a few strategies that allow this to happen. The first and big one is actually buying properties through a subject to transaction. What's cool about that is the existing mortgage stays in place and then the deed transfers over to me or my partner's the LLC that we're buying. And essentially it lets us keep the lower interest rate, so we can keep 3-4% interest rates, even though if you were to get a new loan right now, it'd be a 7, maybe 8%. So that definitely helps our margins because our monthly costs are much less. Second, when buying these, you can either use your own capital, you can use private capital, like private money partners. I have multiple properties like that. But also, you can use business credit, which is pretty cool because the more you look into it, as long as you have a personal score of over 700, essentially you can have access to several $100,000 worth of business credit. And what's cool, as long as you're always planning ahead, forecasting, you can maneuver your way through the big 3 tiers of the banking system. So there's the big banks like Chase, there's more medium-sized banks that are in certain parts of the country. For example, Truist, very popular in the southeast of the country, so Florida especially. And then all the way down to your private credit unions. And so there's about 5,000 different banks in the US. And so if you keep your personal side clean and you're buying assets that cash flow, like high quality assets, and then you're buying properties like Subto properties, you can have a nice spread that allows you to pay back from the cash flow. But in addition to that, the average property in the US is worth $400,000. Average appreciation rate for the past 100 years is 5%, and then it compounds. So in short, the average property worth $400,000. When you average out over 10 years, the principal pay down and the compounding appreciation, it's the equivalent of making $36,000 a year in equity. So you can see how powerful it is to buy properties, Subto properties, and then whether you're using your own capital, business credit, or private money partners, you can see how quickly you can increase your wealth. In the past 13 months, we've bought a little over $1 million worth of property. And the compound effect, though, like I just mentioned, that's where the true wealth like multiplier kicks in. So anyway, back to the Pareto 20 plan. The goal is to buy multiple co-living properties. We are using Pad Split as the platform currently. Each Pad Split, it provides on average, if you're 7-8 beds, it's $1,500 net monthly income. So when I say net, I mean after all the utilities, property manager, cleaning fees, even if there's a lender, like a private money lender, it's a true $1,500 net. So when you tie all this together, you can see how powerful having access to capital is, whether it's the business credit or private money partners. And so I use both. I don't like being dependent on one thing, so I've done a lot of homework on the business credit and know how to access several $100,000 if I want. In addition, though, lastly, the Pareto 20, I plan to hit 20 by December 31st, 2026, and that'll be a portfolio of about $8 million, and then only accounting for the compounding appreciation and the principal paydown, that portfolio will grow $400,000 a year. And then lastly, what's really cool about that is when you refinance a property, like through a DSCR, you can do a non-recourse DSCR, so you don't have a personal guarantee on it. And then also, you can pull money out, you can pull equity out of these properties tax-free. So the more wealthy people I meet in real life, get to talk to them, shake their hand, learn what they're doing, that's what I see is a lot of them, they pull money out through technically debt. They are reducing their leverage at the same time. You're not pulling all of the equity out all the time. But instead of having an income and getting taxed, they buy more properties each year, and then when they need cash, they essentially refi. There's other ways to do it, but they're refinancing and pulling money out of the portfolio. And so that's just a few of the tax loopholes I've seen. So yeah, twice a week I'll be making videos like this, just talking about different things I'm learning, different projects we're working on, how I'm building this short-term goal, the 20 properties, which we're about 1/3 there. And that's as of June 26, 2024. So I do plan on hitting the 20 property goal early. I don't think I'm gonna need 2 years to do that. And then I'll also be talking a lot about the structure of how I plan on managing 75 properties. And that 75 properties is giving housing to 500 people through co-living.